The US dollar has little change to kickstart the trading day in the US this June 11th. I'll talk about the technicals that are driving these currency pairs in this video, so let's get started. Starting off by taking a look at the euro versus US dollar on the hourly chart. The price action trading here today initially moved to the upside in the early Asian session, then broke back below the blue line right here. That's the 100-hour moving average. But as you can see, the price could not extend below the 200-hour moving average. That's similar to what we did here. That's similar to what we did here. That's similar to what we did here before moving below that level and trading yesterday. But the problem with the move to the downside yesterday, we found support against the low price from last, I guess that's Friday's trade, and bounced off of that level. And then since then, we've been staying above the 200-hour moving average. So that's more bullish from a technical perspective. The problem on the top side is that the high price that we saw in here trading here today could not get above the high price that we saw from yesterday's trade. And so the market is confined and waiting for the next shove from the market that may come with the US CPI data, which we released at 8:30 this morning. The expectations are for the core measures rise by 0.3%, while the headline measure rises by 0.2%. This is largely expected to be the last gasp before we start to see increases in pricing from tariffs. We will see it going forward. Also, the year-on-year measures basically suggest that if the CPI rises by more than 0.2%, the year or the month-on-month rises by 0.2% or more, that's going to lead to an increase in the year-on-year data. So be aware of that dynamic with today's number and the numbers going forward. Nevertheless, from a technical perspective, we need to get above the high price from yesterday to increase the bullish bias. If we can stay above the 100-hour moving average, that's good news for the buyers. If we can't, then and move back below the 200-hour moving average, that's bad news for the buyers, and it switches the bias back to the negative or to the bearish side. Let's take a look at the dollar versus yen next, and this currency pair has seen up and down price action in the Asian session. BOJ's Ueda was speaking. The market doesn't expect any action from the Bank of Japan for the rest of the year. That may be helping to push the dollar versus yen to the upside. Also, yields are up a little bit higher in the U.S. and trading here today to start to kickstart the day. On the top side, we do have the 38.2% retracement of this move down from the April, that's the broken 38.2% retracement of the move up from the April low that we saw back here to the May high. We broke back below that 38.2% retracement back here after moving to the retracement up there, but in trading yesterday, we could not extend above that level, and in trading yesterday, the market rotated back to the upside. So getting above 145.314 is going to be a key barometer for buyers from a technical perspective. I put a Fibonacci from this point to this point right here. The 50% midpoint of this move to the downside is just above that 31 level at the 42 level. So let's earmark 31 to 42 as the next key target on the top side for the dollar versus yen. On the downside, in trading here today, the 38.2% retracement of that move to the downside did hold support. I'm going to take this out to show you more clearly, but the 38.2% retracement of the move down from the high price that we saw in May to the low price that we saw in May did hold support at 144.65. So let's call the trading range between that retracement level and this retracement level on the top side as the key barometers for the dollar versus yen. Again, the CPI data comes out, and that may give the pair a shove from a technical perspective. Watch those levels. Finally, let's take a look at the sterling versus US dollar. This currency pair had a very volatile trading day yesterday with the pound versus US dollar moving lower after the employment data and then rotating back to the upside in the US session. We did get back above that 200-hour moving average, but fell short of the 100-hour moving average and rotated back to the downside. So the bias is a little bit more tilted to the downside here for this currency pair. If we take a look at the high price in trading here today, or the most recent high price from the European session, it stalled near the 135.05 level, which happened to be this low price going back to, I guess, last Friday's trade. So there is some symmetry there from a technical perspective. We're also below these two moving averages, gives a more bearish bias. On the downside, we do have this swing area down through here, which was broken in trading yesterday but could not be sustained, and we rotated back to the upside with the bounce off of that area and trade here today. Ultimately, if the price is going to go lower, we need to get it below the 38.2% retracement of this move to the upside. That level comes at 1.34339. So be aware of that level on the downside for sellers to show that they mean business on the downside. Watch that level. So on the top side with the moving averages, we have the 135.05 level. On the downside, 134.339 is a key level on the downside. So there you have a look at the three major currency pairs to kickstart your trading day. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.